sorry, I've sold 2 Russell, I've bought 2 NASDAQ, I'm up $100 on 2 spreads, so I've obviously made myself a bit of money. It's another $50 in my back pocket, and another $50 per contract in my back pocket. And obviously I can start building around that spread, and I can just keep building around those spreads. I can scalp that spread on a relative regular basis now, can't I? I can go in and do that trade several times, 10 times, 20 times over, and I'm trying to just get a little bit of relative value. At the moment, I don't have any relative value because they're all dropping about the same pace. But obviously, any type of uptick, and this is overpriced, isn't it? Any type of uptick, this is going to be an overpriced market, and I want to try and capture that uptick into that overpriced market. And obviously, the first trade I need to get on is Russell, because obviously the market is selling off just now in terms of the shape of the dollar, in terms of the shape of the real yields, in terms of those types of things. I've got to try and work my way into the best possible spread price. And I'm going to do another one at some stage, because there's a little bit of relative value building back into this again, isn't there? There's a little bit of relative value coming back into my favor here. So I'm going to build back into this again. And I'm doing this just on single contracts. I'm just building these spreads based on single contracts, guys. If I see a bit of value in it, I'll take another single spread. And if you see another bit of value, I'll take another single spread. If I see the relative value moving against me, I'll take a single spread, and I'll start buying into those single spreads as much as I can. And I'll pause when it goes in my favor. When it goes against me, I'll buy into another spread. When it goes against me, I'll buy into another spread. And then when it goes in my favor, I pause again. When it goes against me, I'll buy into the spread again. And obviously, you'd never lose sight of what's happening on the lines, right? You'd never, ever lose sight of what's going on in the lines in the background. And, you know, the good thing about spreads is you're using that netting position to always tell you just how much value you've got on your trade, right? You're always using your netting position. So you can see that this is starting to lead a little bit. Now, that's obviously going to be against that spread. So you can see that that is turning, everything else is turning around here. But there is macro in this, remember. So that's okay. That's good news, because that means that I've got another opportunity to maybe do this spread again if price turns back round again. I've got another opportunity to do this whole spread over on a macro scale basis if the spread turns back round again, if the curve turns back round again. And the curve is turning back round again. So there's going to be another good opportunity to do another bit of business, isn't there? It's going to be another good opportunity to do some more stuff. And the good thing for a bank is that these are big. Because you're doing individual trades at individual times, you're getting some really big size in these trades at times without doing a single block trade that has any size in it whatsoever. All you're doing is trying to capture small bits and pieces at relative values. And that allows us to make some really, really good little decisions in this. And I'm obviously hopeful for this spread, and I've managed to build this spread up quite nicely at the moment. I've got a reasonable position in. I'm not making any money, but I'm not losing any money, and that's important. And at the moment, I am up about $300. You start to understand a little bit of the volatility in this spread, and you start to recognize that the volatility is nearly always front-loaded into the NASDAQ, for example. But here's the current spread that I've got on. You can see it's the same trade. It's in the top left-hand corner. So there's the current spread that I'm doing. I am short the NASDAQ, and I'm long the Russell. And you can see I'm only just up in profit at the moment, $60, right? I'm only just up in profit, $60. Now, I'll take a screenshot just now, and you'll see just how this trade has eventually evolved. You can see I've got some really, really good size on this now, right? So you can see what's happened to the trade now. We've just turned that $50 profit into a profit of $3,000. So we've just turned it into a profit of $3,000, right? See that? So you can see that we've just turned a $50 profit into a $3,000 profit. We're in the same position, 40 contracts in total. We've just gone into profit on the NASDAQ, and we've got a $3,000 profit on the short Russell position. So we've just made another $3,000 profit on that trade. Another 3 grand. And all we are doing is we're selling this blue line, guys. So we sold the blue line here. You saw the blue line was rising at that stage. All we did was sell some blue lines. And we were taking advantage of the macro value that we had, just the same way as the value we had up here. Now imagine, if that's $3,000 on that little move, imagine how much money we made on this move here. So if that little move there is 3 grand, imagine how much money that made. Quite a lot, right? Quite a lot of cash. So you can see that the banks, this is how the banks are consistently making those kind of big buck monies. They're just waiting for those opportunities to take advantage of and then stepping into those spreads, right?